Hello, everyone, and welcome to this week's episode of Control Cash, your no nonsense guide to personal finance. Today, we're tackling one of the oldest money debates out there. Is it smarter to buy a home or rent and invest the difference? And in 2025, with mortgage rates hovering around 7% and home prices still sky high in most cities, the numbers might surprise you. Getting right into it, on paper, owning a home sounds like the ultimate wealth builder. You're building equity, locking in your payment, and hopefully watching your property appreciate over time. But here's the catch. Ownership comes with a ton of hidden costs. Property taxes, insurance, repairs, HOA fees, closing costs, and more. These can quietly eat away at your returns. On the flip side, renting feels like throwing money away. But when rent is significantly cheaper than a mortgage, you can take that extra cash and invest it into the stock market. And over time, that investment might actually grow faster than your home equity, as long as you're disciplined enough to invest every single month. So let's put some real numbers behind this. Since the median home price in the United States is around $410,000, we'll round that down to $400,000 as our baseline. This will help make the math a little bit simpler. You put 20% down, that's $80,000 up front, and finance the rest with a 30-year mortgage at 6.5% interest. That gives you a principal and interest payment of about $2,023 per month. Now, let's add in the extras. Property taxes at 1.5% of the home's value comes out to about $500 per month. Home insurance, around $125 per month. Maintenance and repairs, the rule of thumb is 1% of the home's value each year, so about $333 per month. Last, we need closing costs. These don't affect your monthly bill, but they do eat into your upfront cash. At 3% of the home price, that's another $12,000 on top of your down payment. Add it all up, and here's the total. $92,000 upfront just to get the keys, and about $2,981 every month to own the home after 30 years. Now let's compare that to renting. The median 2-bedroom apartment in the United States costs about $1,899 a month. Factoring in a broker's fee, which is often 1 month's rent, and it bumps the effective monthly cost to $2,046. So right off the bat, renting saves you about $935 per month compared to owning. And remember, you never had to put up that $92,000 down payment either. Now let's fast forward 30 years. We'll assume inflation runs at 3% a year, property taxes rise by 2% a year, and homes appreciate at an average of 5% annually. For the homeowner, the total cost of ownership over 30 years adds up to about $1.185 million. The home itself grows in value to about $1.568 million, leaving you with a net gain of roughly $291,000 after accounting for your upfront cash. For the renter, your rent climbs from about $2,046 a month to just over $4,800 by year 30. Over 3 decades, you've paid about $1.168 million in rent, which is nearly identical to the homeowner's cost. But here's the kicker. You've been investing the difference all along. That $935 you saved each month, plus the $92,000 you never had to tie up in a down payment, grows to about $1.793 million at a 7% annual return. When we compare the two outcomes, the renter comes out ahead. Over 30 years, renting and investing leaves you about $242,000 more in net worth than buying the home. And you still have the flexibility of renting along the way. Now, some disclaimers here. We made a lot of assumptions in order to run these numbers, and in reality, this perfect scenario would play out very differently depending on a huge variety of factors. From the homeownership perspective, given home prices have surged in the last 5 years, your home equity could be much greater. This also assumes your interest rate stays the same and you don't refinance throughout the course of the loan. On average, people move every 7 to 10 years. This would assume you buy your first home and you stay there for 30 plus years, which isn't realistic for most people. From the renter's perspective, we assumed rent goes up by 3% each year. As many of you know, this can vary quite a bit depending on where you live. People in high cost of living areas can see rent spikes in the double digits. We assumed you actually invested the saved money every single month without fail. Most people don't. The truth is, we live in a consumerist economy. Most people will spend money as soon as they have it, rather than invest or save it for a rainy day. On top of that, we assumed a 7% stock market return every year, which can vary greatly. Some years the stock market will be up, and others, not so much. The point is, from both perspectives, there are risks. But a key advantage of homeownership can't be measured in dollars, like stability, control, and a roof over your head that's truly yours. But if we're looking purely at the numbers, in today's high rate environment, renting and investing the difference can actually build more wealth than buying. So what do you think? Would you rather own a home and build equity, or rent a cheaper place and invest the rest? Drop your answer in the comments. Don't forget to like and subscribe, and check out my video on the top 5 REITs for 2025 if you want another way to invest in real estate without the headaches of home ownership. Until next time, keep investing, keep stacking dividends, and I will see you in the next one.